I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, what is it, 1 million per coin by 2030. That still feels good to you.
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this?
Despite the fact that 2018 turned out to be a terrible year for cryptocurrencies, ARK Invest CEO and founder Cathie Wood is still committed to her astounding target of $1 million per Bitcoin by 2030. There would be a gain of 3,900%, which would average out to a gain of just over 34% each year between now and 2030. This would outperform returns from the stock market or the real estate market, among other investments. The latest irrational prediction Cathie Wood made for Tesla, another asset with exponential growth, came true, despite the fact that this price projection may appear absurdly high, which helped her gain notoriety and respect throughout the investing community. In this interview with Bloomberg, Cathie discusses why she and her company are quite confident going into 2023, and why the year 2022 only strengthened their belief in Bitcoin and Ethereum.
You know, you have been buying into some of the different names in the crypto space, Coinbase, Grayscale, Bitcoin Trust. Why should investors trust crypto? Why do you trust crypto at this point?
Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum, what you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. So I think that Coinbase is going to come out here looking very, very strong. It just lost a very big competitor in FTX.
Well, what is the market missing, though? Because, that could be one narrative, Cathie, but at the same time, we haven't exactly seen shares of Coinbase rally since FTX's collapse. Do you think to you that represents potentially broader concern about just people's interest in crypto following FTX's collapse?
No, I think it's more fear. I think many people say, we don't know what we don't know. So what we do is we step back, put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, well, okay, is this another Lehman? Could this be, could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now we have, it seems, from FTX, $5 to $10 billion in creditors as FTX has filed bankruptcy. They will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets are, they attract a lot of attention. This is, the three revolutions we talk about all the time, a new monetary system in terms of the first global, private, meaning not government controlled, digital,
right,
rules-based monetary system. That's Bitcoin, a very big idea. DeFi is a very big idea. And while that has been thrown into question in terms of, shifting from one exchange to another, we've had a lot of shifting around. But I think DeFi, in terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe. Well, again, for our ETFs, we, as you mentioned, own Coinbase. We also own Square. And it is interesting that Jack Dorsey has chosen the most transparent, most decentralized crypto asset to center Block's crypto exposure to. And I realize he's trying to, from a developer community point of view, leave them on their own. But we do think Bitcoin, and you can see through the behavior of the infrastructure, hasn't skipped a beat, not one beat, more secure than it was yesterday, the day before, and the day before. So I have a feeling this is going to elevate Bitcoin in the eyes of not only the crypto world, but the investment world at large. And I have a feeling it's going to have more running room through the rest of the world. I think this is the way that this is Block's go-to-market to get into the rest of the world. And we think they're going to be very successful.
So then I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, $1 million per coin by 2030. That still feels good to you?
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think, though, the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop. Because they'll understand it more. Not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis. In fact, oil itself is almost down on a year-over-year basis now. The big pushbacks on this call we get are wages and rents. We're seeing rent inflation reverse quite suddenly and dramatically. So what I think we will look back in history and say, this inflation shock was the function of a supply shock caused by COVID, supply chain problems afterwards, and even more problems after Russia's invasion of Ukraine. If I can just take 1 second, I would like to give an analogy to the late 19-teens. We were in the middle of the massive, most massive innovation the history of the world had seen: telephone, electricity, and automobile, all at the same time. But we had World War I and we had the Spanish flu. Sound familiar? Now, that was much worse than what we've gone through. We've gone through nothing like that. But there were massive supply chain problems back then. And inflation peaked at 24%, right? In June of 1920, and by June of 1921, it was minus 15%. So I think that our 8 to 10% inflation, which is where it was at the peak, is going to turn around, and we're going to see some very big surprises on the inflation front. And you know who agrees with us? The bond market. Look at what the bond market is doing now. The long bond yield 380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations.
Hey.
And it's probably both.
Did you guys find the video interesting? If you did, please hit the like button. For more updates with regards to the cryptocurrency industry, hit the subscribe button below as well. Thank you for watching.